Good evening, everyone. My name is Jean Jo, and welcome to Investing in Short-Term Rentals this evening for our online seminar. So I'll just go into a very brief real estate market update. For those of you who've been to our seminars before, one of the factors that I'd like to look at is the median sale price, and this is for single family homes in San Mateo County. So median sale price is basically the same number of homes sold above that price as below the price. So this chart goes back to 2005. As you can see here in the 2005 era, this is when prices were actually doing really well at the time, and it was ranging a little under $1 million. And then with the recession that happened in 2008, came down to close to 500,000 at one point, and then bounced around until about 2012, 2013, started taking off. And although some dips along the way, has pretty much maintained a steady upward trend until we get to April of this year, where we peaked at 2.25 million. So just to kind of sit with that number for a little bit, that, the prices, this is the median sale price. So that means the same number of houses sold above 2.25 as below it. And that's huge. So when we talk about affordability issues, this is a lot of where it's coming from. Since April, we have had a little bit of an adjustment. So May, June, and July, it's actually come down to where July number, the median sale price was at around 1.8 million. That represents a 20% decrease from the peak compared to last July. Last July was at 2 million. And so that represents a year-over-year change of about 9.5% difference. So there has been some amount of reduction coming down. As you can see, though, it's still significantly higher than even 2020, 2019 levels and before it. So as much as you may hear in the news about a cooling market, prices may be going down a little bit, still they're fairly high at this point, 1.8 million for July. We'll see what the numbers come out for in August. This figure is months of inventory. So this takes into account, if you were to take all the homes that are on the market right now, and then to sell them all at the current pace that it's been selling, how many months would it take to run out? And so traditionally, we've said the balanced market is traditionally a 6 months of inventory. So that's this line here in the middle. And below it is a seller's market. Above it is a buyer's market. So as you can see, here are some places where it was very high. This is during recession years and a little beyond. Since then, basically hovering around this lower line here, which is the 2-month mark. And so as we see in July, in January, that was very low. So we were going at about 1 month or less in terms of being able to sell out of homes. That has increased a bit. So July, the months of inventory was at 2. So 2 months of inventory. Again, you'll hear in the news about softening market, things changing a little bit. But as you can see, the level of inventory is still pretty low here. And so you have, at the 2-month mark. And again, we'll see what happens as the months progress, but it's still not anywhere really near a buyer's market in this technical sense. In terms of median days to sell, so this is how long does it take when you have something coming on the market until you get an accepted offer. So just looking at that number, the blip down here that you see in 2020, that represents COVID. And so during that time period, it's not that homes sold right away. It was that our multiple listing service, the MLS, actually paused the counters during the first few months of the lockdown. And because it just didn't feel like that would be representing a very true number in terms of how long it takes to sell. And we just didn't know where things would go. So that's why that's at 0. Beyond that, you can see that the prices have been basically bouncing up and down around the 10-day mark from the time something goes on the market until it actually gets into contract. So that's what we see for median days to sell. In terms of interest rates, I'm sure all of you have heard the Fed Reserve has increased interest rates over time, several times over this past year. You can see that the mortgage rates the blue line is the 30-year fixed mortgage rate. So you do see that there were steep incline that we had. Basically, people were looking at a doubling of rates almost. So we've had 2.5 to over 5. In recent weeks, it's actually gone down a bit to where we're at about 5.3%. And that is high if you think about what the interest rates have been traditionally. But if you look in the recent years, and so people aren't really used to that. But if you look traditionally going all the way back to the 80s, you do see that there was a time period when interest rates were at the 17, 18% range. And so still historically, we're doing fairly well with the 5%, 5.3% fixed rate mortgage. In the field right now, we are seeing a bit of a shift and a cooling that you'll hear in the market, and we do experience that here. Here's a look at price reductions for active listings by county. So if you take a look at that, all of the counties, I didn't take all of them, but I did take some of the major ones in our Bay Area. And as you can see, for all the active listings that are on the market right now, you can see price reductions coming in at about 20 to 30, almost 40% for Contra Costa. So the listings that are on the market right now are seeing some price reductions happening. And so that's a bit of a concern. I think definitely sellers, we're having to have more discussions with sellers about expectations in terms of pricing, not expecting that the prices should go way up just because the house down the street sold at a certain price, that you're going to go way up after that you're going to sell for much more than that. So the number of multiple offers has gone down, and in some cases maybe we'll get 1 or 2 offers. If you have a really good home in a good location ready to go, they are still seeing offers, multiple offer situations. So that is still going on. What will happen from here? There are a lot of different, there's a lot of different discussions about that. What I would say is that because inventory is still as low as it is, that will be one of the factors. Definitely interest rates and buyers being able to afford the homes at the prices that there are. Most people are expecting that there will be a little bit of a correction, a little bit of a cooling, but we're not talking about major plummeting at this point. So that's kind of where we're at. So with that, I'd like to hand it over to Stefan. So Stefan is the co-founder of Siesta Property Management, which is located in our area here. And I'll go ahead and let him continue on with his introduction. So thank you, Stefan, for being here.
No, thank you. Thank you for having me. I'm glad everyone's here as well. I'm able to talk about what we do. So simply put, we're a short-term rental property management company. So we manage Airbnbs, VRBOs across the Bay Area, and all the different challenges that entails. So we are primarily based in San Francisco, but we manage homes as far north as Sonoma County and as far south as Santa Clara, San Jose. We manage homes in the East Bay as well. So we basically run the span of the Bay Area. The big question is, why do we choose to use Airbnb and VRBO, vacation rental by owner, as opposed to other platforms? What's the difference between Airbnb and traditional long-term rentals? And the benefit to property owners specifically is it's a great marketing platform. Typically, when you have guests from out of town, visitors, business travelers, they're looking to use Airbnb over other traditional platforms. Both platforms, Airbnb and VRBO, provide host guarantees, so that limits your liability as a homeowner. Those liabilities include $1 million in property damage coverage and a separate $1 million for liability insurance. If there ever is a guest issue, Airbnb and VRBO have their guest services that provide intermediary and arbiter resolution, coverage. So you can bring different issues to their attention, and they will mitigate them and resolve them amicably. So what sets our business apart from other Airbnb property management companies? There are a few in the Bay Area. Primarily, there are larger companies that do exactly what we do. They're nationwide. But what sets us apart is our expert understanding of local rental regulations. We are able to incorporate our experience in managing homes in the San Francisco Bay Area and help our clients navigate the maze that is short-term rental regulations. We also have the ability to quickly and effectively resolve maintenance issues. So if there's a plumbing issue, we're going to find the most cost-effective solution to that issue, saving you money, improving your guest experience, and ultimately getting better reviews, which creates that flywheel of earning more and more. We also have a pricing strategy that allows us to achieve about 85 to 90% occupancy year round for all our homes. Our pricing is reflective of market demands and seasonality. So during the summer season, we're able to capture higher nightly rates, and our pricing strategy reflects the lower rates we're able to achieve during the winter. We also work very hard to mitigate guest issues. So we'll go into a home, a brand new property, and we'll take a fine-tooth comb to it, and we'll make sure that any guest issues that would come up during a stay are mitigated and addressed proactively rather than reactionary. If we're addressing issues after a guest is checked in, at that point, you've ruined their travel experience, you're getting a bad review, and you're spending a lot more money. We also charge a pretty competitive management fee. We charge a lot less than other full-service property management companies. There are companies that will charge you 10%, but it involves a lot more work, and the company is a lot less involved, where we try to do everything for our clients, so they're as hands-off as possible. So we also, a major advantage of short-term rentals is it provides owners the flexibility to rent their homes as much or as little as they want. To give you some perspective, I had a client call just last week. The client lives in Los Angeles. He's going to be traveling to the Bay Area for work about 3 to 4 months out of the year. Closed on a property recently in Nevada, and this is going to allow him to retain use of the property when he's in town and use the property as much as he wants, but also monetize it and make more money than he would if he was going simply the long-term rental route. Speaking to that, we also traditionally make much more than we do in the long-term rental market. Guests are accustomed to paying a lot more than a long-term tenant. And then we've also seen other advantages with the review system that Airbnb kind of created. After a year, you start beginning to see compounding earnings. So after your first year, you'll typically see anywhere between 10 to 25% more in earnings, and that continues for the first few years. And then it slows down, but it does continue as you build a base of solid guest reviews, and basically becomes a foundation that you can rely on. So drew up some figures here. These are a couple properties we manage, 4 properties that we manage across the Bay Area. These reflect what we've been able to earn over the spans of a year, and compared to some of the rates that the clients were trying to achieve on the long-term market or were achieving. So you can see San Jose, we've been able to effectively double the traditional long-term rental rates. Redwood City, it's pretty comparable, and Woodside as well. So anywhere between 40 to 100% increase in rates. It's pretty clear cut why you want to invest in the Bay Area. It's going to be a center of travel, business travel. You're going to have guests who are going to be visiting family, friends, and there's near constant travel to the Bay Area, and that's basically year round. During the summer seasons, beginning in May and going through approximately September, there's a large influx of travelers. That does increase the demand that we have, but we do experience year-round travel in the Bay Area. Okay, so understanding the regulations, this is critically important. So you want to figure out what the regulations are in your given area. I would recommend just going to the planning department's website. Airbnb also provides a web page if you type in your city's name. And they're going to have information on big cities such as San Jose and San Francisco. There'll be hyperlinks on those pages to your planning department's website or other resources available to you. And then the third option you have is to reach out to local experts like us who can help you navigate the minefield that is short-term rental regulations. We will have practical experience and be able to answer questions, whereas a lot of times if you go on your planning department's website, you're not going to find clear-cut answers. It might require you to engage with your planning department. But I think first things first is kind of having an understanding of the regulations and then reach out to a local expert. That would be my recommendation. If you're considering short-term rentals for yourself as a property owner, as an investment property owner, again, look up the regulations, try to become as well-versed in them as possible, and then try to figure out what your situation is and how it pertains to the short-term rental regulations. Again, reach out to property managers such as us who do this on a day-to-day basis. I would recommend reaching out to someone who is locally based. If you reach out to a nationwide property manager, you're probably not going to find the level of expertise that you're going to require. So someone who's well-versed in the regulations and deals with them on a day-to-day basis is your best bet. If you reach out to us and you ask us questions, that's something that we do complimentary. We're not trying to charge you for that. It benefits all of us if we are in line with the regulations and our clients have a sustainable rental model. So I want to say there are rare occasions where you can make more traditionally as a traditional long-term rental than short-term rentals. There's not any particular rhyme or reason to it. I can't tell you this city makes more than this city. It just depends on the Airbnb itself. Oftentimes, in situations where long-term rentals will outpace short-term rentals, I guess the only universal law is if you try to cut corners, if you try to invest as little money as possible into the Airbnb prior, if you do not address issues, you will get shut down, you will get bad guest reviews, and it simply will not earn you the money you expect to make. So if you're considering purchasing a short-term rental property, you want to ensure that there's a critical mass of travelers. So you want to find exactly the purpose, the reason people are visiting your local area. So if you're investing in Sonoma, understanding that you're going to get a lot of travelers as opposed to business travelers, leisure travelers rather. So just understanding where your home's going to be located, things that could attract travelers to your home is going to create a competitive advantage. So understanding that, if you're in Sonoma, if you're located close to a winery, it would be helpful to kind of understand what type of try to attract travelers that are going to visit this one particular winery. The way you would do that is by speaking to them, by putting something in the listing title that says you're close proximity to XY winery. If you're close to the various Silicon Valley HQs, let's say you're 5 minutes away from Apple, putting something in the listing title that would separate you from other competitors. Critical importance, besides understanding regulations, I think it's very important to find places in the Bay Area with favorable short-term rental regulations. So an example of this would be Mill Valley, just north of Sausalito in Marin County. They have codified short-term rental regulations that allow you to rent out a single-family home 365 days a year with no occupancy requirements. And we've had great success. Every single property we've managed in Mill Valley has been rented year-round for various reasons. Its proximity to San Francisco, its proximity to Sonoma has made it a very attractive destination for travelers. So if you can find a city that has that and replicate it, that would be my advice as well. So considering purchasing a short-term rental property, first things first, you want to understand what kind of guests you're going to attract, understanding your market. So 3 quick action items: understanding your market, understanding your guests, and understanding the local regulations. So if you're in San Jose, trying to find a 1 to 2 bedroom house would be your best bet. Anything bigger, you're not going to really appeal to business travelers. And the inverse is true if you're trying to find a vacation rental home. An example that I cite is in Santa Cruz. So understanding what type of guests you're hosting. If you're going to be hosting primarily business travelers, you're going to appeal to them if you have 24-hour check-in. You're going to appeal to them if you have dedicated workspace and provide strong Wi-Fi. If you're hosting in Santa Cruz, for example, you're going to want to have amenities such as bikes, board games, barbecues, something like that that's going to attract families and groups of friends. And that'll ensure that your home is rented almost year-round. It's important to set yourself apart, and I think this is universally applicable. So you want to incorporate fun design, bright colors, modern design, but also be very clean and clutter-free. So if you take those principles and apply them to every situation, I think you'll be pretty good. You can take a property and just set it up for Airbnb and do very, very well. So quick explanation about the cost that you can expect while hosting and setting up for a property. So I cite a property that we just onboarded recently. It's about $5,000 to $10,000 in furnishing. The property that we onboarded and fully furnished without any involvement from the owners cost $10,000. That included design, that included hosting amenities and furniture, and importantly, labor. If you choose to be more involved and find furniture secondhand, you can furnish a 4-bedroom home yourself for about $5,000. That includes providing all the labor yourself. But it's pretty good return on investment. Typically, we'll see that utilities cost about $500 a month. And this is based off of information our clients have provided us. So I can't speak too much about this. And then management. So management, we have two separate management packages. We charge 15% or 18% of your gross nightly earnings. But typically you'll see anywhere between 15 to 25% in urban areas. Airbnb also charges 3% of your gross nightly rate. VRBO charges 8%. Those fees can be a little bit offset by increasing the nightly rate for VRBOs. The cities charge you, business license fees. In San Francisco, for example, it's about $90, $95, and it's typically about $100 a year. The transit occupancy tax, TOT, the hotel tax, it's typically about 12 to 14%, and that's charged to your guest. In occasion, Airbnb will collect those funds on your behalf and remit it to the city. So you don't even see those funds, and it's not anything you really have to worry about. The cleaning fee is charged to your guest. So 100% of the cleaning fee can be charged to your guest. Hosts are not expected to take a loss on the cleaning fee. It's supposed to cover obviously the labor cost for the cleaning, but also a laundering cost. And then we also supply, as your property managers, this is something we do, but we supply shampoo, conditioner, toilet paper, and a host of different consumables for your guest. But if you're going to be doing this yourself, you can anticipate it will cost anywhere between $75 to $90 a month in consumables. And then handling potential issues. Part of our job is to screen guests. We want to ensure that your home is well maintained. We do not want to deal with issues for a multitude of reasons. If I have to cite a few, it affects your neighbors. It affects your sustainability as a host. It's not something you would want to deal with. So you might transition to long-term rentals. As your property managers, we don't want to be dealing with messes. There's no money in that. And it's obviously dangerous to our business. So we try to screen guests and ensure that they're there for legitimate reasons. They're there to visit family, they're there to travel, they're there for work, that sort of thing. And that involves simply asking questions. Airbnb, to speak to that more, Airbnb does have a little bit of security in that sense. They do require guests to verify their IDs to ensure that you're speaking to the guest profile that's reflected on your end. And then there are other things that you can do as a host to be proactively mitigate these issues. And that includes installing camera systems such as the Ring or Nest cameras. There are noise monitoring devices that you can set up so you get notified if, for example, the decibels reach a certain threshold. If your neighbors were previously disturbed by a large gathering of people, you can install that and nip any potential issues at the bud. So to discuss our management fee a little bit and our different rates, this is our base management package. We schedule cleanings after every reservation. Guests leave by 11 a.m. and by 3 p.m. the property is turned over and ready for a guest. That service is provided 7 days a week, 365 days of the year. We also create and optimize your listing. By that, we have photography scheduled and coordinated. Those photos are inputted into your listing. We create the copy for that listing. We optimize the settings for your listing to ensure universal or near universal occupancy. We will adjust your rates. We will create house guides for your guests. So when they do arrive or prior to arrival, they have basically what to expect, and it'll include local recommendations for their stay. We respond to guest messages as quickly as we can, responding to guest messages about 14 hours a day, 7 days a week. We also provide 24/7 guest services for your guests. So if there is an issue, they can call us and we can take care of it. We also coordinate maintenance and repairs. So I alluded to this earlier: clogged toilets, electrical issues, guest lockouts, that sort of thing. Those are all things well within our wheelhouse. And then we supply the consumables, the shampoo and conditioners and that sort. We will charge you a $60 or $90 fee, depending on the size of your home, but we do supply those consumables. And then for the premium package, it's everything listed in the basic package, but we do not supply you for those monthly consumables, and we waive the $250 startup fee. And then we also provide your guests trip planning concierge services, and that's all in the effort to increase their guest experience, which increases and improves your reviews. Is there any questions?
Thank you, Stefan. I think one of the questions I would say is in terms of if there is no rent, if it's not rented out for whatever reason, if the owner wants to live there, go occupy the property for a bit, then there is no fee paid to you. Is that
That's correct?
Okay.
So I'm curious if there's damage to the property by one of the tenants, and that creates a time of being unmarketable. Does your company provide coverage for that? I mean, if somebody damages something, like, does big damage to a bathroom and it takes a month to fix, do you cover a month loss of rent?
That's a great question. So if there ever is if there's an issue ever caused by a guest and there's a loss of income, we can charge that to the guest, and then we can claim that against their deposit. If the amount exceeds their deposit, then Airbnb will pay for the rest.
Does it cover the full loss of rent for the time it's taken off the market?
That's correct. Yes, it does.
Yes, hi. I was wondering, because I really want to start investing like in the Las Vegas area.
You don't cover Las Vegas, right?
No, I don't. Unfortunately, I don't know any small companies that cover Las Vegas. I can name a couple nationwide providers, Vacasa, Evolve, but your level of experience is going to be a little bit different than kind of like what we provide. So yeah, I'm sorry.
A local company. Yeah, I know that there are some that are more nationwide. What I liked about Siesta Property Management is that they're local, so I think that makes a difference as well. But and then in the chat, Marcus asked, "Can you upgrade the consumables, meaning like a better type of toilet paper or towels? How do you handle that?"
So we used to have a separate package, but we actually just phased out the cheaper ones, and we used the more expensive ones.
Okay.
So we actually supply some pretty good products, such Charmin toilet paper. And my partner knows a lot more about this, but it's the higher end consumables.
And Lawrence asked, "What area of furniture is worth spending the most on?" So bedroom, bathroom, decorative art. What would you suggest?
It's a great question. Honestly, it'd be hard to say. We have a list of requirements, and the list of requirements is pretty bare bone. So, for example, if we're talking about a bedroom, it's just going to be a bed, a nightstand, that sort of thing, a lamp. I think the biggest return on investment is really going to be the design things that are going to set you apart, and that's pretty cost effective. So, just having an accent wall, for example, and faux plants, even things that are going to set the photography that are simply is going to capture people's eyes. So it's not just one area that's going to be better than the other. It's not if you optimize the living room, it's going to bring in more money. I guess also another way of answering that too is if it really depends on your clientele. If you're going to have a home in Santa Cruz and you're trying to appeal to families, I think having a nice, comfy living room with a really big TV and a nice couch is going to be the big spank for your buck. But it depends. But again, I would start with design and just kind of like analyzing what type of guests you're gonna host.
Sure. And I would just say, because I do use, when I'm looking for rentals myself, my husband always looks at the bathroom pictures. So I think bathroom is actually quite important. Bathroom, just on a purchase perspective, kitchen, even when you're talking about sales, a lot of times I think kitchen can be a big thing. So yeah. So if anybody needs help in terms of purchasing, like thinking about purchasing short-term rentals, I think you mentioned regulations, really being aware of the regulations ahead of time, I think is important. And then can they talk to you, Stefan, about, what they're considering to see if it might be a good idea or not, or how?
Absolutely. Yeah. We welcome clients to just reach out to us, and prospective clients even, and if they have a property in mind, if they're between properties, please reach out to us. We can talk about regulations. We can talk about what property is probably going to make them the most money. They can schedule a meeting with us. It's really, I'm happy to help. It makes for a sustainable hosting model. And if it's going to make financial sense for our clients and allow them to host for years and years, I'm happy to have that conversation with anyone.
Great, thank you. So if anybody has any property that they would like to consider maybe a short-term rental or not, again, depending on which city you're in, the regulations are going to differ pretty greatly. So I would just be aware of that. And also, even if you're intending to purchase one, important to maybe get a property where they already have a clear short-term rental ordinance, because if they don't already, they might change along the way, and that could impact you in the future. With that, I'm just going to go ahead and thank you so much. Thank you, Stefan, for joining us this evening. Thank you for everyone who was able to join us this evening, and wish you all a good evening.